What's up, freaks? It's your boy Marty Ben here to introduce this episode of Tales from the Crypt. I sat back down with Karim Helmy, now at Galaxy Digital, on their research team. Him and Alex Thorne, two-man show there. Looking for help if you're a researcher. You can reach out to him. He shells it plenty in this episode, but I brought him on because he wrote a piece with Leo Zhang and Jack Kohler from the Nietzsche research team last week called The Intelligent Bitcoin Miner Part 2, in which they put forth a model that miners could use to help plan out operations based on future potential price movements and hash rate movements. Really interesting model. We talk about more things beyond that. I think you guys are really going to like it. It's brought to you by our good friends at the motherfucking Cash App. The Cash App is here to help you stack sats, send sats, sell sats, if you so please. And you can receive sats too. We're saying sats, because sats are the standard. Got to defeat that unit bias. It's strong out there, freaks. There's 100 million sats in one Bitcoin. You don't have to buy a whole Bitcoin. You don't have to buy a fraction of a Bitcoin. You can buy whole sats. We're changing it. All right? Sats. Cash App helps you stack sats. You can DCA into sats. You can buy daily, weekly, bi-weekly. I see the Cash App Boost is making its way back into the app. You get sats back when you go use your Boost card wherever Visa's accepted. Cash App can be your bank account. They're offering account numbers and routing numbers. You can get your paychecks direct deposited into the app. And you can stack sats faster. Excuse me for that burp. Mid-Admiral burp. That was very impolite of me. I'm sorry. I tried to hold it in. I have a LaCroix here. It's carbonated. Maybe stacking more sats will help me with my manners. Anyway, if you haven't downloaded the Cash App yet, go check it out. Use the code STACKINGSATS. It's STACKINGSATS. You're going to get $10. $10 is going to go to our good friends at Owls Lacrosse. That's Owls Lacrosse. We got a crow coming in the background here. The birds are singing with me on this ad read. This rip is also brought to you by our good friends at Hodl Hodl. Hodl Hodl is here to leverage Bitcoin's native properties to give you freaks all around the world. This product's available to U.S. clients as well. A lending platform where if you don't want to sell your Bitcoin, you can go to lend.hodlhodl.com and you can get a Bitcoin-backed loan in a stablecoin. So Lend.HODL is a new non-custodial Bitcoin-backed lending platform that allows peer-to-peer lending and borrowing between users globally, anonymously, and on your own terms. Again, they're leveraging Bitcoin's native properties. They have a 2 or 3 multi-sig escrow. You hold one key, your counterparty holds one key, and HODL holds one key. You always have view of your sats when it's in that multi-sig wallet. You make sure it's not rehypothecated. So if you're short funds, you don't want to sell your Bitcoins, you get some liquidity by borrowing. You use your Bitcoin as collateral. And the great thing is, again, you don't need to entrust someone with your funds. It always remains locked in that escrow. If you have some stable coins laying around, you want to earn some interest on those, you can go to the other side of that order book. Lend.HODL offers you the ability to put your stable coins up to these Bitcoiners looking to leverage their Bitcoin and get some, maybe not leverage, but use their Bitcoin as collateral to get a loan in stable coins. You put your stable coins up, you get interest back. Create your offers and set your own terms at lend.hodlhodl.com. That's lend.hodlhodl.com. This rip was also brought to you by our good friends at Compass Mining. Compass Mining is attempting. They're making the path from going from zero to mining at a hosted facility with competitive electricity cost easy for the end user. All right, so you go to compassmining.io. That's COMPASSMINING. COMPASSMINING. I think I added 2 INs in there earlier. Whatever, compassmining.io. You go to the site, you pick your mining model, you buy your miner. Compass acquires that for you. You also pick your hosting facility. Again, competitive rates. They're very transparent. You see your rate, you pick your miner, you buy your miner. Compass acquires the miner for you. It sends it to that hosting facility, it plugs it in, and it starts streaming sats to a wallet of your choice. Beautiful thing. They're trying to make it easy. They're trying to blow it up. They're trying to get more individuals in the mining game. Really cool product. Go check it out at compassmining.io. Last but not least, this rip was brought to you by our good friends at Brains. Edward Evenson, the cheese monster's coming for you. He's coming for you. But seriously, Brains is an incredible team. They've been helping Bitcoin. They've been putting Bitcoin first for years now. They were the first pool ever in Bitcoin, Slush Pool. They're the team behind Slush Pool, as you freaks may know. In 2017, when they noticed that Bitmain had their AMP lead firmware in their AMP miners, which was giving Bitmain the ability to brick individual miners remotely, the Brains team stepped in and said, no. Users need better firmware. So they built Brains OS Plus, which is firmware offered by the Brains team that individuals can download on their miners to stack more sats. It helps them stack more sats. You get more sats for your hash with Brains OS Plus. So they verified also, on top of that, in 2018, a year later, they verified the S9s could run about 13% more efficiently with ASIC boost, but the feature wasn't public, so they put it in the firmware. They developed Brains OS again. It's a custom auto-tuning firmware to give miners more control over their ASICs that currently supports S9s, S17s, and T17s. And what's miners coming soon? When, what's miner? Ed, crack that whip. This is what I envision Ed Evenson. I just imagine that's his day in the Czech Republic in the Brains office. Just, what's miner? Get it out there. They're also working on open source initiatives. They're leading Stratum V2 development alongside Matt Corral and Square Crypto. This is a decentralized mining pool which allows individual miners to construct block templates and add their own transactions to a block. A beautiful thing. It's already implemented on Slush Pool and included in Brains OS Plus firmware. They also push out a lot of content for Bitcoiners. We got new stuff in the ad read stuff that I missed. I'll get to this. I know Brains team. I know you're listening, Daniel. I'm sorry. I'm just seeing this in the Google Doc we have here. Yeah, it's got the new farm management too. They teamed up with, we talked about this a couple reads ago. Daniel, I'm sorry. I'm just seeing this. Wish you would have picked me in Telegram. But yeah, go check it out, Brains. Incredible products, incredible team. Open source stuff. Always staying true to Bitcoin. It's a beautiful thing. You love to see it. Brains, BRAIINS.com. BRAIINS.com. If you want to go check out their new farm manager, go to BRAIINS.com/OS/plus/manager. Or you can just go to brains.com and click the Brains OS Plus Manager in the top menu. Check it out. Something new they launched a couple weeks ago. Enjoy this with Karim. Really good dude. Really smart dude. Pushing the mining industry forward. Tiki!
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent here. Back in the Jersey office, back in my father-in-law's bedroom, ready to talk Bitcoin mining, particularly the Intelligent Bitcoin Miner Part 2. Sitting down with Karim Helmy, now on the Galaxy Digital research team. What's going on, dude?
Hey, Marty. How's it going?
Going good, man. First time we met on this podcast, you were working with Coinmetrics. You've recently made the move to Galaxy, working with the legendary Alex Thorne on the research team there. How's it feel to be back in New York, working for Galaxy? And what sort of was the impetus for your move from Coinmetrics to Galaxy?
Yeah, and I mean, it's definitely super good to be back, and it's good to be back on the show. It's been like a year now, so long overdue. But I mean, so I joined Galaxy because Alex reached out, and he kind of laid out the vision to me. We're going to be building the best research team in the industry. And, I was down with it. So I joined as the first hire recently. And Like Alex is the man. So I'm pretty stoked to be out here. I'm pretty stoked to be at Galaxy and really just all around optimistic.
Yeah, I think he's actually going to be a bit. Your boss is going to be a bit angry at you because we're trying to coordinate an episode between the two of us ourselves. But I reached out last week. Yourself, Leo Zhang, Jack Kohler of the Anicha research team dropped part 2 of the Intelligent Bitcoin Miner series, and I just thought it was an incredible piece, basically detailing how you guys are building out models that could potentially be leveraged by miners to help forecast profitability and revenues based off different price and hash rate scenarios, taking miner hardware, the price you paid for that hardware, and electricity costs into consideration. So how'd you team up with Leo and Jack to do this? Because did you contribute to part 1 or?
No. Part 1 was all those guys. But yeah, Leo and I have been friends for a little bit. And we've been looking for an excuse to work together. So with my background in data, his in mining, we just thought this was a really good way to pair up and kind of figure something out together. And I'm pretty stoked. It came out pretty good, and yeah, looking forward to talking about it a little bit more.
Yeah, so let's jump into it. Like, for any of the freaks out there who may not have read the piece yet, how would you describe it? What were you guys trying to accomplish? I think I just tried to give an overview of it, but I think like more granular detail. What were you guys looking to accomplish with this?
Yeah, absolutely. Mining is a really complex, multifaceted industry. There's just a lot of stuff going on, and it all interacts with each other in weird ways that you wouldn't necessarily expect. So what we wanted to build was just like the minimum viable tool to model mining from the perspective of a miner who wants to make decisions and how to operate their machines, when to turn things on and off, things like that. We wanted to model that from a global perspective, kind of by piecing together all of the interactions that individual miners are doing. And then we wanted to give the user the ability to, play with the variables themselves. We made a lot of assumptions in this process, and we wanted to make the user able to adjust that. So we built out this model that lets you see how your mining operation would do under, a variety of different conditions based on like agent-based modeling. And we wrote an article about it, and we open sourced everything. So
that was the really cool thing, open sourcing the models, which I think is just incredibly generous of you. This is something, it seems that a lot more people are getting into mining at the industrial scale, or at least attempting to, particularly energy producers, as they figure out that their excess energy can be used to mine Bitcoin in a profitable way. So throwing these models out for the market is actually probably going to be very beneficial for people trying to make the case internally at these companies and part of making that case, presenting the potential profit that could be made. And so let's talk about like the agent-based modeling. I really like that you tied in Conway's Game of Life to this, and I guess we could jump into like why this particular type of modeling for the Bitcoin mining industry and its potential profitability, and how accurate it may be in practice.
Thanks, man. Yeah, Leo's a bona fide poet. So the Conway's Game of Life, like that was all him. I thought it was really elegant. But so agent-based modeling, for kind of anyone in the room, is a type of simulation where you base the results on the interactions between a bunch of different agents. And those agents make decisions based on, their environmental circumstances. And it's typically more or less deterministic. So in our case, we have some element of randomness, which is just like how we generate prices and how we generate the fee distribution. But then from then on, everything that happens is just a series of decision-making events that's entirely deterministic. And then we kind of get the aggregate network conditions, so the aggregate network hash rate, and like as a result, individual miner profitability. All of that is just built by creating the whole from the sum of its parts.
Mm-hmm. And yeah, so you guys lay it out here, like basically trying to lay out the conditions that would define whether or not a particular miner has to turn off their machines to remain profitable, so they're not mining unprofitably. The types of machines, and so how did you guys acquire the data, particularly about the specific models and how profitable they may be at any given point in time?
So we collected data from a few different sources. So with price data, with fee data, stuff like that, we got that all from Coinmetrics. I'm kind of a pro with the API now, having worked there for a little bit. And then, we got the rig price data from our friends over at Hashrate Index, and from General Mining Research. They were gracious enough to share some of their data with us as well. And then everything else, like, honestly, Leo just put in a ton of legwork, like talking to people to kind of get some best guess estimates on some of the variables. So things like shut off times, and a couple of the other variables was just like, look, we are guessing and we are acknowledging that we're guessing, and that's a big part of why we open sourced it and just let people play with the tool themselves. Because if you know more than we do, like please use this model and please share the results with everyone else too.
Yeah, that's, again, like, the fact that you guys open source this is incredible. So, like, if you are a miner and you want to leverage this open source model, like, how would they do so? Like, what are they putting in? Like, are they just putting in their actual cost and then running these models with different hash rate and price simulations running forward? And do you think that would, like, provide, like, an actual, like, tangible and actionable like, modeling for like a business?
Yeah. So we tried to make it as easy to use as possible, right? Like, it models under a few different circumstances, kind of with what we had as like our our base case, like bearish, bullish, volatile. And then, you can just plug and play like what types of machines you want the user miner to use. So just put in your electricity cost, what machine type you're running, and then calculate from there. It's always hard to gauge how actionable it is, but I do think that this is, like a pretty useful tool. I think if you run this, it might give you some food for thought on like whether the decisions you're making are, the right ones, and whether to like spin up a new operation, whether to scale down a little bit, maybe, if that's the right thing to do. So yeah, that was kind of the perspective we went into this with, is like, look, we're making a lot of assumptions. A lot of them are straight up guesses, but like, by letting people fiddle with it, by letting people put in what they think is going to happen, we'll do the intermediate work on like, you put in what you think is going to happen in the world, and we'll let you know if this is a good idea, what you were thinking of doing in the first place.
Yeah, like one variable that I think is really interesting, and being able to play around with it and run it through models can actually lead to some like really good decision making at the individual miner levels, like the reaction days to the particular models, like newer models having longer lead times to get to market versus older models, and the ability to actually pay for a shipment of miners, get it delivered to you, and then plug it in, and the difference between those.
I totally agree. And we're in like a historical market failure right now with the ASIC supply chains. Like, there's just clearly so much demand, and it is so profitable to run a mining operation. And there's just no new ASICs like really being shipped out for months and months, right? So it's I think a pretty interesting thing to fiddle with. And yeah, the growth rates, the turn on times, the shut off times, all of that is really stuff that, like, if you have some information that the market doesn't, and you plug that in, it could be pretty useful.
Right. And so, yeah, let's just talk about this for a little bit, like the supply crunch at the chip level. What are you seeing there? Any insight?
Yeah.
Like, what do you think? Like, I'm hearing rumors that MicroBT's having a hard time finding foundry space for 2022. And there's obviously right now there's long lead times for the latest generation models, whether it be Domain or MicroBT. What are you hearing on the ground?
Yeah, so we're just, we're hearing the long lead times as usual. The large buyers, they're kind of soaking up all the supply where it's available, and even they're struggling to get machines for months and months. And yeah, I mean, like, look, like, ASIC supply chains and chip supply chains are pretty constrained, just because there's not a ton of like fab space. And Bitcoin miners are really like near the bottom of the barrel there, like because demand is so volatile, and like the actual manufacturers just like they prefer working with like steady, reliable clients. So yeah, I mean, like the whole world is kind of feeling this fab space shortage, from autos to computers to everybody, but Bitcoin miners are aching a little extra just because number doesn't always go up.
Yeah, hash rate is not a trailing price as it has historically because of the supply crunch. And I mean, that's another part of the point that Leo's been trying to make with his content at Anicha, right? Is the cycles that these markets go through. And it's a very manufacturer beneficial. We're in that part of the cycle where the manufacturers have all the leverage. Like we're seeing like crazy price per terahash invoices at Great American Mining. Like it's going up above $100 per terahash for many people. It'll be interesting to see if that persists. And like with that being said, like do you think at any point in the next or during this cycle, well, that's like the thing. Like, does the cycle always repeat itself? Like, will Bitcoin mining ever get more respect at the fab level in the ASICs? Will they get more? Will people make more space at the fab level for them in the future because of sustained Bitcoin price and demand from the mining industry?
Yeah, I mean, so as price goes up, these ASIC manufacturers will demand more space, right? Like the basic order size that they go in for will be bigger. That's a good thing. That means like, if I can sell you like 1,000 units of something, that's a lot more enticing to me than if I can sell you 100 of something, even if your demand is a little bit volatile. The other thing that we're going to be seeing, hopefully, as more institutional buyers come into Bitcoin, is just dampened volatility, because they have stronger hands than retail, and as volatility dampens on asset prices on Bitcoin, we should expect manufacturer volatility of demand for ASICs to actually dampen as well, because it's all reflexive, it's all intertwined. So I think that's going to be cool. Maybe it's not so great for miners who already have rigs out, because it means there's going to be more competition. But if you're looking to spin up a new mining operation, or even like scale, if you're not comfortably sitting on piles of Bitcoins, it could be really good for you in the future.
Yeah, more competition is good. We welcome it at Great American Mining. But no, that like we see it. We see the oil and gas industry having an inflection point, if you will, around the conversation about Bitcoin, and particularly mining with excess gas. And it seems like that industry, which is pretty massive globally, wants to move into Bitcoin mining with authority here. And so like just thinking about like demand from that industry on top of the established Bitcoin mining industry, I think there could be a scenario in which, especially if the price moves up, like you said, and institutional money comes in and dampens volatility on the asset price side, the demand for ASICs can withstand itself better than it has in the past, just because of the amount of new entrants that want to leverage basically being able to bring a new liquid market to their energy assets that never existed before.
No, it's cool. And I think like also we are going to see institutional players start to enter mining. Hopefully that also kind of dampens volatility of demand on mining rigs. A big part of the reason for this is just like institutions like working with things that have cash flows, and mining operations have cash flows, as opposed to just, buying spot Bitcoin doesn't. So I think that's kind of cool. And it's a really exciting time to be in mining.
Yeah,
for sure.
It is. It's stressful too. On the supply side. That's why like having tools like yours is extremely beneficial. Like how long did it take you to build this model and actually open source it and get it all on GitHub?
Yeah, I mean, so this was something like we were both working part-time on. Leo is spinning up something new and really cool and exciting. I've been, at Coinmetrics, and kind of we rushed to get this out before I got to Galaxy. But it is 4 months in the making, all told, part-time. But still, we started, with the new year and didn't get it out until like mid-April. So I can't say we were actively working on it that entire time, but it's non-trivial.
What was like the most interesting thing that you learned throughout this process that maybe you didn't expect or know before you guys worked on this?
You can do some like pretty simple simulations, just like of like what we call the geometric Brownian motion model, right? And it comes out looking a lot like the charts for price. It's just completely random, and it comes out looking pretty cool and pretty sick. So I've always been a sucker for like pretty plots and kind of like it was cool to kind of be able to spin that up using simulated data, not without a ton of difficulty.
Right. Like, what if could you like simulate something like the abrupt shutdown of the coal power plants in China that happened a couple of weeks ago, and obviously had a shock to the network hash rate for a little bit?
Yeah, so our model for network hash rate was, like I mentioned, just like entirely deterministic based on price. So it didn't really incorporate these kind of like big black swan events. But things like, price plummeting 20% overnight, like we did a lot of simulations and a lot of them came out that way. And that was kind of cool. Just that, there's so many, like, it's very hard to predict things, but it's not that hard to like actually just model them. And there's the saying among statisticians, like all models are wrong, but some models are useful.
Mm-hmm.
And yeah, it's not, I guess it doesn't seem terribly difficult to make a model that's, at least partially useful. It's better than nothing. So that was kind of cool.
Yeah, like so how would these models be useful, right? Like you model it out, and then as your operation's going, you just see where hash rate and price are, and based off that, at any given time, look at the model, like, all right, we're above the profitability levels of what the model's laid out for us. Once you dip below that, like, all right, let's turn off. And maybe just it enables quicker reaction times.
Yeah, no, totally. And I mean, like, I think, there needs to be a human in the loop on all of this stuff, at least with the way we have it set up. But just whenever you're at an inflection point and you're thinking about scaling up your operation or scaling it down, what we want people to do is to just, take a look at this model, put in what you think, like, it's just the supports for the model. We're not asking you to like get prices today, tomorrow, whatever. Just, do you think directionally we're going up, and do you think volatility is going to stay the same-ish, or do you think directionally we're going down and volatility is going to, skyrocket as well, or anywhere in between? We just want people to put that in, take a look, and see how their operation does. And maybe that'll inform a decision. And you probably already know, right? Like, if price is going up and I'm making money today, I'm probably going to be making money tomorrow as well. But it's just another tool to kind of inform yourself to see, are the decisions I'm making rational? Are they right? Can I afford to open up in a bear market? Because a lot of the time, like, miners will continue to be profitable if price goes down quite a bit from here. So, especially for those kind of decision-making processes, like, that's where we see this fitting in.
Yeah, especially if your electricity cost is low, you can definitely survive some downward volatility. And like, what's fascinating here is it just, for me at least, highlights the continued maturation of the Bitcoin network and the Bitcoin mining industry more specifically overall. Like, these tools are exactly what you want to see come to market so that businesses can make decisions about profitability and expansion or curtailing expansion. And this is actually fascinating because I recorded a podcast that I posted this morning for Great American Mining with someone on our team who works on oil fields and has in the past, and has worked closely with their business decision-making teams about whether or not they should drill new wells. And depending on the amount of gas and oil that comes out of the ground and the BTU content and pipeline infrastructure and blah, 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 all the variables that go into that particular asset extraction and delivery business. And it's very similar. Like, at the business side, they're running these Monte Carlo simulations based on how many barrels of oil they can get out of the ground, how they can get it to market, what the price of a barrel of oil will be, what the price of natural gas will be at the given. any given point in time. And so you have very dedicated and dedicated teams in other industries just simply that are running these types of analyses. And it's beautiful that yourself, Leo, and Jack brought this model to the Bitcoin mining industry, because it's something that was lacking, and now you can equip businesses with the ability to do this stuff, create teams around this stuff, and actually make smarter business decisions. Because that's one thing, like, mining's been hailed as the Wild West, just like everybody's shooting from their hip, and it seems like the industry at large is getting smarter and smarter at a very quick pace too.
Yeah, it's pretty exciting. Yeah, I mean, Bitcoin's like, a real commodity now. Like, it's kind of crazy. It's a little scary, but I think by and large, like, I've been pushing for transparency for a little bit now. Just at CM, that was kind of my big push, was just trying to find ways to discover patterns that kind of make, things that used to be opaque and weird and foggy less foggy. And I think one of the best ways to do that is to just, build open source tools. I think it's just it's almost our prerogative as Bitcoiners and as people who kind of like want to see this thing succeed. You just kind of have to open source the stuff you build. So hoping to continue to do that, to kind of put out some cool content and stuff that is just free to use and helps the space.
Yeah, it's beautiful.
And if you want to work with me on that, we're hiring over at Galaxy. So join our research team.
Get the shills in. We're going to talk about Galaxy.
Gotta.
Staying on the model. Like, how do you see this evolving over time? Like, especially as derivatives products for miners particularly come to market, hash rate derivatives, more price options and futures options out there. Could you start working that stuff into the model, do you think?
I don't think we've thought about like hash rate derivatives and their space in the model. I'm personally hugely bullish on the space they're going to continue to they're going to start to fill in the industry. I think hash rate derivatives are going to be the next big thing. I don't really see a world in which they're not, especially as we kind of start to see these like exchange-based hash rate derivatives take off, or exchange-traded hash rate derivatives. But yeah, I mean, they definitely like do change the equation pretty substantially, right? Like, if a miner is in a contract with a buyer of their hash rate for an extended period of time, they can operate under conditions that would otherwise be unprofitable. And the contract buyer is locked in, right? Like they have to pay for legal reasons, for, exchange mechanical reasons, or just like, because otherwise they'll get margin called, something like that. It really doesn't matter. Like the miner's getting their money, they're going to continue to mine. The buyer has to buy. So yeah, maybe reaction times go up even. Maybe they go down, just because you have a much more liquid market and miners can kind of like hedge out and act more nimbly. But I think that's pretty exciting.
How do you see the hash rate market evolving, particularly, and how these contracts are delivered? Like, are you bullish on hash rate tokens, spot hash rate, exchanges? I have my own thoughts of how this may play out, but interested to hear yours.
Yeah, I've thought a little bit about hash rate tokens. I've thought a little bit about hash rate derivatives in general. I put out a piece with Galaxy on hash rate tokens, and kind of the thing is, like, right now generally they're pretty overhyped. Like, this does not constitute an offer to buy or sell securities or whatever, and this is just me talking. This isn't the views of Galaxy. But like, the fact is, there's hash rate derivatives or hash rate tokens right now that are trading with a 45-year payback period. If that sounds reasonable to you, so be it, but it just doesn't to me.
Yeah, I agree with you. The token model of delivering hash rate does not make sense to me, right? Because you can't guarantee that the miner will actually deliver the hash rate, number one.
Yeah, and fundamentally that makes them unscalable, right? Because like who's gonna lock themselves into a contract to like issue hash rate forever? And really it leaves them with two options in the long run. They have to either buy back those tokens or default, because nobody's gonna be, nothing lasts forever. So it's kind of, to me, a little bizarre. I am bullish on hash rate derivatives generally. I think we're going to see like basically mirrors of the traditional financial markets on it. I think we're going to see like, options, swaps, whatever. I think they're really cool because they have cash flows. So
Yeah. Right. Like and like the token is just, that model leads to inherent mispricing because you have retail really doesn't understand the market FOMOing into a token with an associated value to it as well. And it's like, I don't know if that's the way
yeah,
to work out. But
people do love tokens though, is the
right.
thing. Yeah.
Yeah. And yeah, so like, how would you see a spot market developing around this? Like, what would that relationship between the miner and the purchaser, the hash rate look like, and how would the delivery play out in your mind?
Yeah. So I think we're gonna see markets. I think it's an important clarifying point here. When I talk about hash rate derivatives, and I know you're thinking of it the same way. I just wanted to kind of level set. Like I'm talking about derivatives on the value of an individual's hash rate, not derivatives on the network hash rate. There's these like network hash rate derivatives, most famously launched by FTX, and I believe shuttered actually last month, just for lack of trading volume. And those just aren't exciting because in the long run, network hash rate just kind of goes up, and it can't be used to hedge out mining risk, just because like the relationship between hash rate, network hash rate, and price on the value of your hash rate is multiplicative, not additive. So you can't combine those two to kind of like try to hedge out any risk that you might have as a miner. So I'm not too excited about those. But when I talk about like hash rate derivatives, I think the majority of the market is going to settle on like synthetic delivery. So just these like cash settled derivatives that you can trade on leverage. You can kind of do all the cool stuff that like derivatives do when they're cash settled. But what I find most exciting is actually like the physically delivered hash rate futures, hash rate swaps, etc., where a miner will actually like route their hash rate through a hypothetical exchange that is kind of facilitating all of this, and like the buyer gets to route it to whatever mining pool they want. And then gets the revenues from that. It gets even more exciting when you kind of start thinking about Stratum V2, which I'm hugely bullish on, which lets you kind of order your own block templates. Or sorry, it lets you order your own transactions and form your own block templates. So you can select which transactions you want to include in the block. Right now, if I'm a frequent transactor, let's say a large exchange, I could potentially be interested in kind of buying some of these as a hedge to make sure that I can like settle transactions smoothly and easily, even if like fees go up a lot, or even if like problems happen on the network, there's some sort of disturbance, and I think that's super exciting.
Yeah, we saw Cash App over the weekend send out a new notice on their app like, hey, network congestion is pretty high right now, we're going to limit users to, I believe, one on-chain transaction a day because they cover the fees. So something like this would certainly allow them to facilitate like a smoother process on their end, I would imagine. And then you get into like fee rate market derivatives and stuff like that, and you can get some pretty intricate hedging strategies and planning strategies from large businesses, miners. Again, the maturation and development of these financial primitives is pretty exciting to see, and it's going to be pretty necessary. Bitcoin is going to be the network that we think it's going to be, and it should be. So seeing this stuff is extremely bullish.
Yeah, no, I mean, fee swaps are super cool too, and it's just we've already seen like informal markets for these kind of things evolve, specifically around like out of band payments, where like someone will some of the mining pools you can actually just like, I don't know what exactly. I think they take PayPal. I was gonna say you can just spend like
a credit card or something to get your fee,
your
transaction included.
Yeah, and you get your transaction included, and that's not included on chain. I think that's like a way worse way to do things than these derivatives. Just kind of like, it's opaque, it's iffy. So I'm kind of excited to kind of see it move toward a more auditable, more like okay, this is what's happening. These are the transactions that are getting included. Like the blockchain is the canonical source of truth kind of situation.
Yeah. Yeah, you're not depending on some pool operator to get a credit card payment and be like, all right, now I'll include your transaction.
Exactly.
Yeah, I'm like, so yeah, like paying upfront for fees, like using these hash rate or fee derivatives, like giving a miner some Bitcoin up front to guarantee inclusion in a block at some point in the future when fees are higher. All this stuff is crazy interesting. And again, comparing it to other commodities businesses, let's focus on oil and gas specifically because that's near and dear to my heart, obviously. Like we mentioned that they have these business planning teams running these Monte Carlo simulations to determine whether or not they should drill wells, but they also have these teams that are dedicated to hedging and the hedging strategies of the oil price and the commodity price risk that they take on when they embark on these drilling endeavors. And so like it's all coming together. Like these are some of the boring, even though we may not find them boring, but some of the boring details and market structure, infrastructure that's coming together on the back end that most people are not talking about is Doge pumps, is everything else pumps. It's everybody's caught by the siren calls of shitcoins right now, but in the back, like all this really important and integral financial infrastructure is coming to market, and it's beautiful because it's leveraging Bitcoin's native properties too. Like you just mentioned, you want to use Bitcoin's canonical ledger as the source of objective ultimate truth for these contracts, and it's beautiful that we could do it.
It's really cool. There's so much. I mean, there's just so much like cool stuff happening on Bitcoin right now. And yeah, I mean, I think like new ways to model. I mean, just think of it this way, right? You can't have a sophisticated operation without sophisticated financial modeling. It just makes it much harder. You have way worse decision making capabilities. You don't get that kind of like insight into the different circumstances and what could happen. And of course, I'm talking about like mining modeling, the way that like the tools that me and Leo built out, and Jack. But like, I'm also talking about like things like risk modeling, right? Like so few miners know kind of what their sensitivities are to like different conditions. You know, even excluding Monte Carlo, like how low can the price go before you go under, right? Like just stuff like that. And there are tons of miners who do know that, but you know, there's tons of people who are just like plugging in machines and don't.
Wing a prayer. He's like, oh, I'll just plug this in.
Yeah.
Price is going.
So
hashrate remain stable. 13-cent kilowatt hour electricity costs. Oh, we'll be fine.
Yeah, man. I mean, it works when the price is going up.
Right.
Well,
that's what leads me back to like one of Leo's earlier pieces too. Like, is this cyclical? You know, like obviously it has been cyclical up to this point, probably will remain, but like will we have these conversations with price all the time, and probably naturally ties to the mining stuff too, but will the depth of the cycle be the same? Like particularly think about Leo, like right now manufacturers have all the leverage, people are FOMOing into mining. Price is eventually going to hit a crescendo at some point in the future. I'm not going to pinpoint exactly when, but when that happens, more and more newcomers are going to FOMO into mining, and then you have a crash. But again, going back to the types of players moving in, like is that crash as pronounced as it has been in the past? I'm just ranting here.
Yeah, no, I mean, I'm with it. Like market cycles are pretty real, right? And right now we're like going up. I don't know about if any of the stuff associated with market cycles that some Bitcoiners say is real, but like, you know, sometimes price goes down for a while and sometimes it goes up. And when price is going down, like plug it in and see what happens. Like that's not, you know, really the best strategy to adopt. So
was that a slight towards stock to flow?
might have been. It might not have been. So I declined to
or deny. What else are you cooking up? Let's talk more about Galaxy. What's the intention behind the research arm? I mean, you've got some really good Bitcoiners in the space. I met with Drew and AJ from the mining team while I was in Austin last week. We had a really good conversation. But seeing Alex come over from Fidelity to build out the research team, you're the first hire. My ears are perked. Two very good Bitcoiners, very smart Bitcoiners. You guys have added a lot to the space in many aspects. I mean, your research has been incredible since you started putting it out for Coinmetrics. What do you guys have planned? What are you going to focus on in mining specifically? A little bit of everything. What's the intention? Is your research going to be aimed at institutional investors looking to make decisions, or just get the general public at large better insight into what's going on in Bitcoin?
Yeah, so I mean, like you mentioned, right now the team is just me and Alex, right? And we are going to be covering everything that we or our clients are interested in. We have a lot of interest. You know, it's a big industry, it's a big space, and there's a lot of stuff going on that I think is really, really exciting. So yeah, we're definitely going to be putting out a ton of mining content. Just Galaxy does have a mining desk run by Amanda Fab. And we're also going to be covering we're also going to be covering like a ton of other stuff. So hopefully, you know, we'll see some content out there on lending, definitely on the markets. And, you know, one thing that I kind of talked about a little bit in public is that, you know, Galaxy hasn't actually put out like an article yet on like why Bitcoin and why Bitcoin matters. And so me and Alex are gearing up to write that one, because I think, yeah, I mean, I think we just kind of need to, you know, lay out our case. So
can we get a preview to what your case is going to be, what you guys are thinking about? You dive into usage stats, what's going on around the world.
Yeah, I mean, I will say it's pretty stats heavy, just given my background and given Alex's background as, you know, a pretty solid like on-chain data guy, investor in Coinmetrics, you know, big early data player in the space. So definitely going to have a lot of that. You know, we're going to kind of touch on like how the world is changing, you know, declining trust in institutions, things like that. And I promise it's going to be good. So.
Okay, you heard it here first. It's a promise. It's going to be good.
It's a promise.
When's it going to be released? That's the other hard question. Is it a soon TM research piece or
soon TM? Soon TM. So yeah, I'd be lying if I said I'd written a word of it yet. So,
all right. So soonish TM, we'll say that.
Yeah. I'm also excited to be working on. You know, it's been a minute since I've done anything deep on nonce analysis. But that's still where I cut my teeth, and I'm pretty stoked. Galaxy is going to be putting out some pretty good nonce analysis content.
Yeah, that's what we discussed the first time you were on. Gosh, when was that? Was that pre-COVID? Post-COVID? During COVID? This time?
I think so. I started at Coinmetrics in early May, so I think it was around then.
Yeah, it had to be.
Yeah,
because I think it was your first State of the Union or whatever the weekly newsletter is. What?
Yeah, it was my first State of the Network.
The network, yes, my bad.
Yeah, that came out. So that came out like early May. Yeah, I crazy, man. Time flies, especially when you're like bunkering down. So
you had just moved to LA, or were about to move to LA when we talked, and now you're in New York already.
Yeah, I'm back in New York. I lived in Puerto Rico for a minute. That was kind of wild. Shout out to Puerto Rico. It was pretty sick.
Where were you down there?
I was in San Juan. Really, really awesome place. Honestly, cannot recommend it highly enough. I did get dengue fever. I got bitten by a mosquito and just got like super sick.
What was
so
that
part was awful.
Like?
Terrible, man, terrible. But we're out here. We are a-okay, and we're out in New York where the mosquitoes are, you know, nice and friendly. So
I'm not gonna give you fever dreams.
Yeah.
What was like the biggest side effect of that? Just like cold sweats all day.
Yeah, I had a pretty high fever. That was a young, and like the back of your eyes just kills you. It just hurts so much.
Really?
But yeah, no, you know, we made it out. It's it's in the past now. So I'm just gonna wear bug spray like every day for the rest of my life from now on, pretty much.
Would you rather get dengue fever or COVID?
Toughy. I was rooting for Zika the whole time. I was like, I was waiting for my test results to get back. I was like, okay, fingers crossed, like praying it's Zika.
It's crazy, man. Be careful. The mosquitoes, they'll get you.
They'll get you. They'll get you. And they're after your Bitcoin too, I swear.
That's what blunt force and your Bitcoin. Now, that's what down in Austin. I was just in Austin for 2 weeks. They have massive mosquitoes down there. Like massive, like this big. It was
That's crazy.
Freaks listening right now can't see how this big is. I'm holding my hands up. Pretty big. But yeah.
Did you see the bats?
Did not see the bats. I heard a lot about the bats, and I walked over the bridge where the bats fly under or fly from during sunset, but I wasn't able to catch it. Maybe I think we'll be spending a lot more time there come fall. So hopefully when I get back, we'll be able to check it all out.
Next time, man. Austin's awesome.
Yeah. Great vibe down there. A lot of quality Bitcoiners.
And the food.
Food was pretty dope too.
Yeah, man, like it. God.
Shout out
like
Taco Joint and Loro. They're the places I frequented most when I was down there.
Yeah, no, Austin tacos, very, very good. Very good.
Yeah. Before we wrap up here, like what else are you looking at the Bitcoin world right now? What's interesting you? What's catching your attention? What are you following outside of the mining stuff and your why Bitcoin piece? Anything catching you by surprise that you think people aren't talking about or aren't as heavily focused on right now?
Yeah, I mean, I'm always interested in like lending markets. That's something that I've kind of been following a little bit on the side and haven't really gotten the chance to put out anything deep on. One thing that I've always kind of just been curious about in both traditional finance and Bitcoin is like trying to gauge like how much leverage is in the system, in like a formalizable and kind of like repeatable way. It's hard. And frankly, like, because it's not like my deep focus area, it's just kind of hard to make, like sense of anything that's going on. But I think it's really important. And I think kind of when we see these like huge drawdowns, like we saw over last weekend, that are kind of like very clearly there's a role played here by leverage. It's making everything a little bit more severe. It becomes a really important question. And I touched on risk modeling earlier, but like all of that stuff like becomes so much important when you're in a highly levered system where the run-ups can be massive, but so can the drops.
Yeah, it was really interesting yesterday. I took a nap and the price fell from like 52 to 47 and slingshotted back up overnight. Where we're sitting at like 54 right now.
I have no idea, to be honest. Like I couldn't even tell you like the left digit, let alone the right one.
But it is those, especially over the weekend, like those cascading margin calls. It seems at least that leading to these big red candles that then get slingshotted back. It's very interesting how that happens. It shows that there's a lot of leverage, at least to me. This is what it last night showed, that there was a significant amount of leverage that got taken off the table, and then there's a significant amount of buyers as well waiting in the depths of those price drawdowns to scoop up some sats.
All right, man, 75 by the end of the podcast. Let's go.
Let's see where we are. I got Clark's dashboard here. Yeah, 53,940.
I can live with that.
Yeah, I can too. Yeah, we have been in this like weird range, right?
Yeah, no, it's a trip for sure. But yeah, I mean, beyond that, like, look, I'm really focused on building out the team in Galaxy. Like, it's just me and Alex for now, but we really don't want it to stay just me and Alex, because then we have to do twice as much work. So we're looking to hire like crazy, and I am gonna continue to use your podcast as a platform to show that. So.
What? How big do you guys want the team to get?
We're looking to add on like 3-ish people now. We want people with experience in finance, especially. But anybody, just like shoot me a message on Twitter and like let's talk. If you're smart, you love Bitcoin, like I'm definitely open to having a conversation. So
at Karim Helmy, right?
You know it. Yeah. Wow. Marty Bet knows my handle.
Oh, stop it, Karim. Stuff I have to remember is my job as an interviewer. Thank you and Leo and Jack for putting together this piece again. I mean, I talked to Leo about it. I wanted him to be on this conversation with us, but he said no. I'm going to drop another piece that I'm working on. Then I'll come on. I'll talk. I said okay.
Damn. All right. I haven't heard about that one yet, so
I might be giving.
bullish.
Sorry, Leo, if I'm giving away some no information on the actual content of the piece. So I'll be waiting for that with bated breath, Leo, if you're listening, and then we can talk about it. But yeah, no, again, like very exciting to see you guys put this out because it proves the maturation of the industry, these tools that exist in similar markets, commodities markets, particularly in the mining industries, whether you're mining for oil and gas. Obviously, it's not technically mining, you're extracting these things, but these models that business analysts can run to just make business decisions about whether to expand or contract operations. And then again, on the futures derivative side, that's starting to mature. You're seeing it all come together, which is a beautiful thing to see. And open source tools like the ones that you guys build are massive. I mean, I know we've tried. I mean, we have built these models internally as well at Great American Mining, but open sourcing yours and being able to iterate on that with a bunch of other industry players is going to be massive for the space. So thank you.
Thanks so much, Marty. Yeah, I do just think of it as kind of like raising the floor. Like everybody has these like in-house models that they use, but we want to make it as easy as possible. And it's a simple thing, but doing what we can.
Yeah. Well, shout out to you. We will link to Karim Helmy in the show notes. Obviously, we'll link to the Intelligent Bitcoin Miner Part 2. And Karim, if you have anything else you want to link me to, or me to link the freaks to, more importantly, I'll include that in the show notes too. So.
No, you got it, man. Thanks so much. And thanks so much for having me on.
No, it's always a pleasure. Welcome back to the East Coast. It's good to have you on the Eastern time zone again. Sorry, I rescheduled this like 4 times today. I'm still on the mental haze after the Austin trip, trying to get all my computers back on Eastern time zone. Yeah, that's all we got this week, freaks. Peace and love.